Hey guys, it's CJ Investing here. Welcome back to my channel. And today I'll be doing a quick stock analysis on Qualcomm, ticker symbol QCOM, ticker symbol QCOM. So before I get into it, I need y'all to like, comment, subscribe for more of this great content in your algorithm, because there'll be more to come, and to help me reach 100 subscribers by the end of 2023. So getting right into it, as you can see, they're down over 26% within the past year, and they're up over 68% in the past 5 years. So you're getting a good deal on this company, I believe. And as you can see, that the little needle right there, they're closer to the 52-week low than they are their high of 101. Their high is 152. So they're at $110.69 as of this recording. P ratio is 11. Market cap is 123.25 billion. I consider that kind of medium cap, in my opinion. A medium-sized company. And their beta is 1.24, meaning they move. They're slightly more volatile than the market. They slightly go up, more up or down than the market does on a regular basis. More than one means they're more volatile, and then less than one means they're less volatile than the market. They move less. They're more stable, like companies like Johnson & Johnson. As you can see, they're in the semiconductor industry, 51,000 full-time employees. So Qualcomm engaged in development of commercialization of foundational technologies for the wireless industry worldwide. It operates in 3 segments: Qualcomm CDMA Technologies, QCT, Qualcomm Technology Licenses, QTL, and Qualcomm Strategic Initiatives, QSI. The Qualcomm segment develops and supplies integrated circuits and system software based on 3G, 4G, and 5G, which we have currently right now. And that's going to play a big factor in their growth, as well as the artificial intelligence sector. And I'm bullish on their automotive side of things, as well as their phone segment with their processors, the things that they're able to do. From 2019 and 2022, you can see their full-year revenue is going up, except for 2020, which was a tough year for a lot of companies out there. Some didn't make it, but this one was still able to gain quite a bit of revenue. Earnings going up. As you can see, total revenue it's at 42.9 billion. It's going up from 2019 all the way to 2023. Their margins are pretty high. As you can see, their gross profit is like 24 billion as of recently. And net income is going up as well. Basic earnings per share is going up 3, 4, 7, 11. That's per year. Basic average shares are going down like this. That's what you want to see. That means that the company is doing what it's supposed to do and buying back its shares. So when they buy back their shares, they increase your investment in the overall company. If they issue shares or sell shares into the market, they decrease your investment or dilute you, and you don't want that. That's not a good thing. So you want companies buying back shares. Total assets, as you can see, is 49 billion. 49 billion. Current debt, 1.9 billion. They could pay that off like nothing with their cash on hand. Going to the statement of cash flows. You can see the net income up there again. Dividends paid. They only pay about 3 billion off in dividends. 3 billion. They purchased 3 billion of stock as of recently. You know, the amount is going up because they increase it. They increase their dividends. They increase how much they buy of their shares, and they're paying off quite a bit of debt on their balance sheet. That's something you want to see within the company. Yeah, that's another thing. They got quite a bit of free cash flow as well, which is why I love them. I think it's like 8 to 10 billion or something like that in free cash flow. And what free cash flow is used to pay off debt, do share buybacks within the company, and pay out dividends to the shareholders like you and me. So you want plenty of free cash flow from these companies. As you can see them on the Google, I wanted to show you their margins, 18 and a 20, low 20%. I believe they're going to go up over time, 25%, you know, some quarters. I just want to show you how much money they're actually making. And, you know, it's more normal for tech companies to have higher margins, credit card companies, bank companies, things like that. Margins meaning they make more money. It's good to have a company making revenue, but it's even better to have a company keeping their revenue, meaning the margin, how much of their money are they keeping? How much of it do they have to pay for their revenue? How much are they keeping to do other things with? So as you can see, the dividend rate, 3 years, 6%. Over the last 10 years, they've been growing it at a 10% rate. So this is a nice dividend grower. They're growing the dividends, and they only pay about 49%, or maybe a little less. 49% of their cash they pay out. And this company has been paying a dividend for 19 years. And what do you know? It's been increasing the dividend for 19 years. So that's really good. Not a lot of companies can say that. They've been paying and increasing the dividend since they've been paying the dividend. So if it gets to 25 years, that means it's a dividend aristocrat, meaning it's been paying its dividend for at least 25 years, and it's on its way, I believe. You know, that's a big milestone that dividend companies look to achieve, and they're usually more solid, stable companies that are dividend aristocrats. As you can see, return on invested capital, another important metrics, all in the double digits. I mean, it's awesome. This last return on capital was 29%. As you can see, some 40s and 50s on there. And the recent past for Qualcomm. So you're getting great return on invested capital, return on your money that's invested. So with return on invested capital, you know how well a company management team is investing their money back into the business. So with Qualcomm, we see that they're doing a great job. I'm on Google again. As you can see there. Now we're headed over to YouTube. We see some of we're on Qualcomm's page on YouTube. I'm subscribed to their channel. Introducing Qualcomm 212S and 9205S. Moderns for uninterrupted Internet of Things connectivity. That's what IoT stands for, Internet of Things. Mainly dealing with like satellites, Wi-Fi. As you can see, ultra low power that I've watched throughout YouTube, and some earnings calls as well that I listen to. So as you know, if you didn't know, 6G is projected for, I guess, around 2030 time frame. Qualcomm is supposed to be the #1 cellular company, #1 Wi-Fi type company, the #1 on-device artificial intelligence company. I mean, that's some of the things I gained from the interview, what the CEO was saying. And so they're going from phones, the computer PCs, the virtual reality glasses, to automotive sector, which the CEO is most bullish on the automotive sector, which he says, you know, some pretty exciting things going forward to enterprise networking, the broader industrial Internet of Things, which is IoT. That's what that stands for. Acquisitions, they made a big acquisition back in 2021 for Nuvia for $1.4 billion. So that's pretty huge. That's gonna go huge forward when they roll out their next generation processors. getting into AI and different things like that. Some of their partnerships include Meta, Google, and Microsoft. Meta, they're helping roll out with Meta glasses as well as the metaverse. So that's going to be a big thing. Really excited about that myself personally. They have big opportunity with India. So guys, I just want to thank y'all for watching. I appreciate and I love y'all, and I hope y'all have a great rest of y'all day. See you next time. Peace.